It's 8 o'clock in the morning. You wake up, grab your phone, and see a notification that changes everything. Your bank account is frozen. All of them. No savings, no credit, no way to pay for anything. Panic sets in. You look outside, and the world is already in chaos. People are rushing to ATMs, but the machines are dark and empty. Every card is declined. Long, angry lines are forming outside silent banks. The air is thick with fear. This isn't some far-fetched movie plot. This has happened before, and it could happen again. Think back to the 1930s in America. The Great Depression wasn't just a stock market crash. It was a full-blown banking catastrophe. Nearly 9,000 banks collapsed. People lost everything. Life savings, built over decades, vanished in a single night. There was no deposit insurance back then. When your bank failed, your money was gone. Forever. Families were thrown onto the streets. People starved. The fundamental trust that holds our economy together was completely shattered. The fear was contagious. Just the rumor of a bank failing was enough to cause a bank run that would destroy a perfectly healthy one. Fast forward to 2008. Many of us remember this. Lehman Brothers, a titan of finance, collapsed. The world held its breath as governments scrambled to prevent a global meltdown, pumping billions into other failing institutions. But the damage was done. Millions lost their homes, their jobs, and their confidence in the system. Credit froze solid. Businesses couldn't get loans to make payroll. People stopped spending, paralyzed by uncertainty. The entire global economy teetered on the brink, and these aren't isolated incidents. History is littered with these financial landmines. In 1835, when the Bank of Maryland failed, the city of Baltimore erupted into riots. In 1906 India, the Arbuthnot Bank collapsed, wiping out the savings of thousands. The domino effect is terrifying. When a bank fails, it's not just numbers on a screen. Workers lose wages. Businesses lose suppliers. Markets freeze. Even a single, non-systemic bank failure can drag down an entire region's economy, increasing unemployment for years. When a major systemic crisis hits, the impact is 2 to 4 times worse. The speed of modern life just pours gasoline on the fire. In 2023, Silicon Valley Bank imploded almost overnight, largely due to a bank run fueled by social media and instant messaging. Tech startups suddenly couldn't access their own money to pay their employees. Panic spread in hours, not weeks. And just this year, in 2024, a small bank in Oklahoma failed. Depositors with funds over the federal insurance limit were left in limbo. A stark reminder that even in our highly regulated system, chaos can strike fast, and it doesn't always play fair. So let's play this out. If banks shut down tomorrow, what happens to daily life? It grinds to a halt. Grocery stores can't restock their shelves because their payment systems are down. You can't pay your utility bills. Small businesses can't pay their employees, leading to mass unemployment almost instantly. The government would have to scramble just to maintain basic order. Social unrest wouldn't be a possibility. It would be a certainty. History shows us that panic makes everything worse. Rumors of hoarding create real shortages. People start fighting over essentials. The fabric of society begins to tear. But here's the twist. In every crisis, not everyone loses. Some people adapt, survive, and even find opportunities. During the Great Depression, farmers who had diversified their crops and kept some cash on hand fared much better than those who were completely dependent on credit. In 2008, investors who saw the warning signs and moved their money into safer assets preserved their wealth while others were wiped out. The lesson is always the same. Flexibility and foresight create resilience. Human behavior during these events is fascinating. Fear drives people to do irrational things. But it can also give rise to incredible cooperation. In towns where banks failed, people created their own barter networks, trading goods and services directly. Trust shifted from faceless institutions to neighbors and friends. The crisis, in a strange way, rewired communities to be stronger and more self-reliant. It teaches us that adaptability and community are just as valuable as money in the bank. Of course, governments will try to intervene. They'll inject money, guarantee deposits, maybe even nationalize banks, like the UK did with the Royal Bank of Scotland in 2008. But these measures are a tourniquet, not a cure. They might save the system, but they don't instantly restore public trust. Fear has a long memory. So, if you woke up in that world tomorrow, the game is simple: survival. The lessons from history are our playbook. Diversify your assets. Don't have all your eggs in one digital basket. Keep some physical cash. Stocks, bonds, crypto, they're all vulnerable. But real assets, practical skills, and strong relationships, those are durable. Imagine walking through your city after the shutdown. The ATMs are silent. Shops are boarded up. But in the midst of the chaos, some neighborhoods are organizing. A local farmer is trading produce at a community center. A carpenter is fixing a roof in exchange for food. Skills, not dollars, have become the new currency. The people who adapt first are the ones who find security. Ultimately, a banking collapse reveals a fundamental truth. Our entire system is built on trust, not just money. A crisis tests our planning, our foresight, and our social cohesion. It is both a magnifier of our weaknesses and a teacher of our strengths. The unprepared will always suffer the most. The adaptable will survive. And the wise might even find a way to turn crisis into opportunity. Panic is contagious, but so is cooperation. The choice is always ours, to despair or to act. History is not kind to the unprepared, so ask yourself, what's your plan? Thanks for watching. If you found this thought-provoking, please hit that like button and subscribe for more content that makes you think. Stay safe and stay prepared.